Hello, it's February 3rd today, 2021. Beautiful day here in Vancouver, British Columbia. Sunshine, and we can see whitecaps at the top of our local mountains here with a little bit of snow. Uh, Today I'm going to do something a little bit different. I normally give you stock picks for the next 3 months to a year or so. I'm going to do some ETFs. The theme is going to be similar for all three of them, or three different classes of ETFs. Quantitative easing due to the responses due to the lockdowns due to COVID, quantitative easing, money printing, potential risk for inflation for when the economy reopens, hopefully in the summer of this year, even if it's later. There is a risk now that for inflation that I haven't seen in my investment career, which started in 1997. So I haven't recommended anything for an inflation hedge before. But for the first time, I see some potential inflation risk. First one, agricultural commodities. Agricultural commodities have done very poorly over the last 10, 15 years, but with what's happening, it's very likely that they will have a reversal, and that's a good place to have some money. How much? It depends on what you already have in your portfolio, and if nothing, maybe it deserves a small allocation. A couple of ETFs to get exposure to agricultural commodities. The first one is the Rogers International Commodity Agri ETN, Exchange Traded Note. And another one is the Invesco DB Agriculture ETF, DBA. Next, again, along the same theme, silver. With silver having really not done much over the last 10 years or so, and prices having gone up during that time, it's probably time for silver to catch up with whatever inflation we had over the last 10 years, plus whatever inflation we're going to be having in the next 5 to 10 years. It's anybody guess how much that will be, but it's probably going to be more than 2% per year, likely 4 to 6% per year for the next, I'd say, 5 to 10 years. A good way to get into exposure to silver would be the Sprott Physical Silver ETF, PSLV symbol, or the SLV ETF. It's also possibly timely with the Reddit Wall Street Bets group attempting to short squeeze the market, which might not be possible given the size of the silver market, but while they're out there buying all the coins and silver coins or whatever it is that they're doing, and ETFs and options and so on silver, there may be some additional pressure on the market that may be timely right now. The third idea here is have some exposure to cryptocurrencies. Now, in the last month or so, we now have access to two exchange-traded funds that we can put inside even registered accounts for Canadian investors like RSPs and TFSAs, and they are the QBTC.U. That's the Bitcoin ETF trading on the Toronto Stock Exchange. Then the QETH.U ETF. That's the Ethereum ETF. Perhaps a 1% position or something like that in those might be okay as long as you're willing to possibly lose all of that money. 'Cause, the cryptocurrencies are essentially, at the moment, a pyramid scheme. So they only have value as long as other people want them. And many people seem to want them, including now for the first time institutional investors. So it's what we call an asymmetric bet, where the most you can lose is 1 times your money, but you could possibly make 10 to 20 times your money if everything goes really well. It's something for a very, very small portion of your portfolio, if that fits within your risk profile. Give us a call to help you with determining what the right allocation to these sort of investments is, if any, or talk to your investment advisor. Thanks very much.